Hi, my name is Nicholas Blakiston. I am the author of Discourse, The Bridge to Light, a book that I wrote that predicts a crisis and presents a solution to get through that crisis and create a good world. So, this video is about what's going on in the financial markets. We had a big sell-off today, as people know, in stocks. There was a triggering event this morning. China has essentially said they're going to cut off rare earth minerals, which are critical components used by the military and others. Trump has retaliated with additional tariffs, and it's a hot situation. It's a fucking problem, right? So, meanwhile, there is another issue going on in the silver market. And this video is going to focus on that issue because that issue is one that is complex and is going to concern a lot of people, and very few people will understand what's going on and what it all means, and most importantly, how we can move forward and what we should expect from what is happening. So I am an accountant, but I have taken a keen interest in studying financial markets, and this is something I want to tell you about. So the LBMA is the London Bullion Metals Association. It is the largest physical metal trading platform in the world. It's not the only one. There is a big physical market in China, and it's a global market with a lot of players. But the London exchange is the largest physical exchange. So silver prices have risen up to, they've broken through their record highs from 1980, priced in dollars, and they've pulled back from that level, but they're right near that level. So the futures market in silver has lowered in price relative to that physical price, which is referred to as the spot price. Well, so we got, actually, sorry, I should have just said what I said. The spot price is a conglomeration of things that tries to represent the physical global price. But the physical market in London sets a physical price. So, or they have. Well, they still do. So, well, all right. Sorry, I got to be real specific in the words I'm using right now, to make sure that I'm saying what I need to say and I'm not saying the wrong things. So, okay, bear with me. Thank you. Whew. So, when that happens, when that futures price is lower than spot, it's called backwardation, and it indicates a tightness in the physical market in London. This is also indicated by higher than normal lease rates in London. And so there are multiple signals indicating that there might be a shortage of silver in London. And so what I want to talk about is what that means, and how that will affect things. So silver is a metal with kind of two different sources of demand. It's an industrial metal used in a lot of applications, medicine, solar. It's the most conductive metal, so it's electrification. It's got a massive industrial demand that has been rising globally. So, actually, no, I don't think that's true. I think it might have been steady. It might have been flat this last year. But it has an industrial demand. It also has investment demand, people who hold it because they believe, for one reason or another, that it will go up in value relative to other things. So, if the physical market in London runs out of silver, well, what that means is that you an get physical silver. You can't go to London and buy it if you're either of these people. So there is an ETF in London, the SLV. So this holds silver allocated in its own sort of separate vault. And this silver, as people buy shares of this, it buys silver, it adds to that vault. As they sell shares, it sells silver. But that silver is separate to the physical market. So the bullion banks who run the exchange, essentially, they have silver that's available float, meaning that if you knock on the window, you say, "Hey, I'm here to buy some silver." Now, it's not just these are big bars. These are big industrial sized bars, 400 ounces. So these are industrial users, and the SLV ETF and other large trading houses that have vaults at the LBMA. So the SLV is going to have the issue of, if the bullion banks can't deliver to the public, well, that includes SLV. They can't deliver to SLV. So what that means is they're not going to be able to issue any more shares. Now, the silver that they've got, there are people who doubt this, and look, there's a lot of different people who have studied this market and have different opinions. I personally haven't arrived at anything to lead me to believe that the SLV vault isn't a separately handled bit of metal. Even though there's leasing that goes on between them. My from what I've seen, I haven't discovered a reason to say that I don't think that the silver that the shares are represented by isn't in a segregated its own possession, but just not on the available float, which is what we're talking about. We're talking about the available float runs dry, meaning that you can't just show up in London and buy these bars because they don't have them for sale. So what would happen is the SLV would cap its shares, and then you could only buy a share from someone who was selling a share. And so it would start trading essentially as its own vault. So people could still, if they wanted to buy silver and they trusted that SLV metal was there, they could still come in and they could buy that, but they would have to find someone willing to sell it. So it would just become a market. And I mean, would that market that might actually that actually might become, well, the thing is about this vault is some people are going to have more faith that it's there than others, and so there's going to be a price, and this price is going to fluctuate, and it could trade at a premium or at a discount to the net asset value that's in the vaults based on how convenient people think it is. And there's another ETF, the PSLV, which is in Canada. They also keep 400-ounce bars, but they don't. They source from refiners or anyone who's got a 400-ounce bar when they need a 400-ounce bar, right? So that's that. This so if the LBMA is out of inventory, then the inventory that comes available to the market is going to be as it comes out of a refiner. So refineries, my understanding right now at least, is that there's a lot of stock in the refineries, especially well, because we've got like these bullion dealers in the West right now saying they're not even buying 90% or sterling silver, any impure silver, because the refineries right now aren't taking it, or there's like a big refinery that doesn't want it. And the reason I think they don't want it is because there's a backlog at the refinery because people are trying to source these big bars. So it's going to be interesting, the PSLV and the SLV, how they trade. That's going to actually inform people as to what they think the physical price is, because with the LBMA not having that, they're not going to be able to, I wouldn't think, do this, price. They wouldn't be able to set price because they wouldn't have any trading essentially going on. The ownership in SLV would be traded but it wouldn't be the rules of it would be different. It would be, this is a vault of silver and you're buying an ownership in that vault, and it's a fixed amount, and these shares are just going to trade on the market, and until the LBMA can source bars again, replenish its stock, and then reopen trading, hopefully, which I also want to talk about. So in America, you have the COMEX, and at this exchange, this is an exchange where futures contracts are exchanged. And so a futures contract is, you say, I want to buy a contract so that I can get now at COMEX they do 100-ounce or the 1,000-ounce. What I say, I think I said 400. I was thinking about gold. I think the silver contract in London, I think, is four. I think they're. I think they might be. You know, I was talking to AI about this because it was helping me understand this. Now I'm thinking maybe they both use 1,000-ounce bars for silver, and I think that they were giving me the gold bar numbers. Maybe they do use the same size bars. No, I think they use kilo bars. No, that's gold. Oh my gosh. I think they use different size bars. So the COMEX, these bars, well, they have what's called registered inventory, which is just how many silver bars they got at COMEX. And they're saying it's at like record levels, right? So people are going to start sourcing bars from there. But gosh, I just realized. So they'll have to deliver. So, but they have a record high registered, but a lot of the bars are spoken for. So I don't know how much available like float they have to serve the market, but that will be one place. People try to get whatever bars they can. But people might end up having to wait for the refineries. And so when the refinery, so I'm thinking the refinery is going to become the price setter. So because when the refinery they get their bar, you know, and maybe, because who knows, maybe COMEX, maybe they become a bidder. Maybe the LBMA may become, so the LBMA will be a bidder. The PSLV will be a bidder. And then industrial users might be bidders. You know, people who are concerned with what's going on might become bidders. Now, the refiner, what's he going to do? He's going to do whatever he wants. If he wants, he can sell it. Or maybe he'll say, you know what? Maybe we shouldn't sell this. Because maybe this is something that everyone really wants. Well, look, there would just have to be a bid, right? Well, what do you want? What can that dollar buy? So, and maybe the bid isn't in. I mean, the bid could be in anything, you know? Maybe the right person shows up at the refinery and just smiles at them the right way, and that's worth more than anything you could have given them. Now, there are other people who have stock, right? I mean, there are all kinds of people, all kinds of, you know, the people at the LBMA, other, you know, customers of the exchange have inventory in their vaults, right? Maybe some of these parties show up and accept some bids. So whoever's got supply is who gets a bid. So, I mean, I kind of talked my way through that. It didn't actually end the way I thought it was gonna when I started it. But I was talking to AI and I was saying, shoot, I really gotta like go chat with people about this stuff, right? And look, your stocks, it depends what they are, right? I mean, some stocks have real assets, real businesses with real value, but I mean, depending how restrained holders are from releasing their... See, because here's what's going to happen, right? Someone's going to accept a bid, you know? And then, someone, like, say someone shows up, they're like, okay, here's $5,000, give me this much silver, right? They're like, all right, let me take that money. Now the guy who got that 5,000 realizes they can accept bids. While the people who didn't accept that bid think, shoot, maybe I could, well, we'll see. We'll just see how this goes, And people got demands. I mean, metal owners have demands. They would like to eat, and they would like to live in houses, nice places. They would like nice stuff, right? I mean, so it's just figuring out what's it going to take to get that. And I'm sure people are going to I don't know. Now, the US government, they I guess they don't have silver. Now look, this is what I was going to talk about. Now look, as prices will rise. We don't know exactly at what point an equilibrium is going to be reached, but if you think about like a lot of people who stack silver, right, like retail stackers, they think about the silver gold ratio. They think about it's 80 to 1. It used to be 16 to 1. Some people say it's going lower than that. I've heard people propose 1 to 1, due to the fact that it industrially dwindles. There's so many industrial uses for it that, as an investment, it's scarce, versus, I mean, I don't know. I've heard 9 to 1 is where it comes out of the ground as far as how much gets mined, silver versus gold. Gosh, this video is going to cut off at some point. I got to hurry this up. Eventually, it collapses to a point where each stacker says, you know what? Not each stacker. Some people just love silver. Maybe they'll hold it forever. Maybe they believe in the industrial use case, for example. Maybe they think it's going to go to 1 to 1 and it's 4 to 1. Maybe one guy thinks it's going to go to 16 to 1, and that's when he says, you know what? I don't. A lot of these guys, what I'm telling you, is that when they get to that ratio where they feel like that's a fair price, they're going to say, I want gold. Because most people who invest in it as stackers, they believe in gold and silver as stores of value that they favor for their liquid capital. So at some point, as silver breaks out, because obviously the biggest physical exchange in the world has no more silver, of course the price is going to rise. We don't know what's going to rise to, but at least in terms of gold, it will rise to a level where people cashing in for gold, and that's how you get your equilibrium. And some industrial users will say, you know what, it doesn't make sense to pay this much anymore, and so they'll reduce demand, and so eventually an equilibrium will be struck between silver and gold, and so gold. Gold is a unit of account that people could use just to see if they could find a way to break even. Because that's what they did before this experiment we're on with the dollar. So whatever, man. I got a book. I'm sorry. I did some edibles, so I've been kind of slow because of that. It's Friday evening. I was just relaxing a bit because been a long week at work, and I've spent so much time focused on these markets in the time afterward. It's been a real interesting dive, and I'm fallible. I mean, that bar thing, obviously I didn't get my info good before the video. I'm not going to redo it. But prices can work. Yeah, equilibrium can be struck and deals can be had. Yeah, that's what this is about, man. No one will benefit from civil war or, international war. The markets are how we can coexist peacefully. Negotiation, mutual terms. That's the solution. That's the solution to finding the right price of silver, and that's the solution to land disputes, trade disputes, all kinds of fucking disputes, man. Sometimes the solution is just some people shouldn't be near each other, and some people shouldn't associate together. Yeah, each person should be a nation unto themselves. Under God. Or at least serving goodness, serving kindness, serving humanity, serving Mother Nature. Even if one hasn't yet figured out that this universe has an intelligence to it.